Hello traders, hello marketers, hello institutions, hello investors. Welcome to Urue Markets, where we tell you what is going on in the market currently and what will happen in the market. Welcome. So grab yourself a cup of tea as I have, because the market will be very interesting, what we'll analyze and show you. But before we dive in, let me tell you a little background story why this video is being made today. Let me sip my tea. So yesterday, while discussing with a friend about Urue Markets, he asked a very interesting question. He asked me, the market is very volatile. Things happen, the market shakes up things, people lose, people gain. Different factors affect the market. Currently, there is a war going on in Iran, the US-Iran war. Can you predict a war? That was a very interesting question. Can you predict a war? First of all, wars come with its own issues, and people generally do not like wars. So, but can you predict that a war is about to happen? I did not answer that question. I said to myself, okay, I will need to answer that question with a video, with a beautiful illustration of what the Urue market strategy can do. The question was particularly with reference to US oil, gold, and stuff. So quickly yesterday, we decided to build our strategy on US oil. Right now, you're seeing the US oil screen, the US oil chart. Usually, what we do on this channel is to talk about gold, Bitcoin. But because of that question, we decided to build our strategy on the US oil between yesterday and today, and then make this video to explain to you what the Urue market strategy can do, what we have built, how even if there is a war, our strategy accommodates it. Our strategy shows you that this is what the market can do at this point. So let's begin now by talking about our strategy and how it covers the current US-Iran war. So first of all, how do we analyze the market? We have our rules. We've explained it in a couple of videos. First, we look at the trend. What is the trend? What is the current trend? Then we look at our confluence. Then we look at the liquidity. We look at the timeline. Then our arc tells us where the market is flowing to. And then finally, we infuse the news. You hear us say infuse the news. The reason is because with or without the news, Urue market strategy can tell you where the market is going. Whether you hear the news, you are somewhere you don't have access to the news, you simply have Urue market charts, you don't know anything that has come out in the news, you can trade successfully. Your eyes can be closed. You are only seeing. How can your eyes be closed and you see? You are only seeing our Urue market chart. You can trade profitably with this chart, with or without the news, whether there is a war going on in Iran or not. So from that question that my wonderful friend asked, we decided to build this structure. We picked up our structure, build it on the US oil. So let's see what it will show us. If it matches with what we have been explaining, what our strategy is, and for you to see. In fact, we just finished building this strategy on this US oil. And then immediately we want to explain it. We'll see if it matches all we've been explaining about our Urue market strategy. So is your tea with you? Are you well seated? You have your pen and paper? We have a lot to talk about. So let's start. The trend. The trend. The trend is the big boy in the market. The trend is where everyone is facing. If everyone is going north and you are going south, you'll be taken out. You are trading against the trend. Generally, it is said the trend is your friend. Urue Market has mapped out where the trends begin, where the trends are, where the trend ends, where the middle of the trend is, as you can see. So, can you predict a war? Was the question. Well, the simple answer is no, we cannot predict a war, but we can predict our time tested Urue market strategy. So, the trend. First of all, it's good to note that the US war started, I think, on Saturday, February 28th. Was it a Saturday? No, that was a Wednesday. Somewhere there. That was when the US war started. And it's still ongoing. What does our trend say about that? What does our trend say? Our trend says that on February 25, a trend ended. February 26th. Our chart says that on February 26th, a trend ended. What was that trend? It was sort of a bullish, bearish trend. And it's good to know this about the US oil. Generally, the US would want their oil price to stay low for the benefit of the consumers, the the indigents, the US citizens, the residents in US, so that they don't complain. And that's why you see when during election campaigns, politicians say, "Oh, current US oil, the gas price is high. We have to bring it down and stuff." Generally, the US government would want their oil price to stay low for the benefit of the citizens. On the other hand, they will want investors, buyers who have come in, they would want to export their US oil at a higher price so that they can make money. So for the consumers within the state, the government would want the oil price not to be high for them. But for the investors who are coming to buy, those who are coming to import from them, they would want to sell it to them at a higher price so that the government can make money. So you see the dilemma the government is facing. How do we balance this? How do we keep the gas price low for the consumers within the state? How do we keep the price? How do we sell it out to our investors, to the importers at a higher price and make money for the government and keep the citizens happy with a lower price? So that is the buy and sell dilemma they always face. But that's why you see price has to go up, has to come down so that there is a balancing there. So on this date, the trend ended. February 28th, the trend and February 26th, right here, the trend ended. So what was it that made this go up? When the trend ended, as you can see, we had a timeline there, right there, right there. You can see it right there. Our quarterly timeline. I believe by now you have mastered the colors we have. Quarterly is purple right here, yearly is gold, and then 6 months timeline is green. Now we choose to maintain that just for this chart. Now a trend ended. We're simply explaining this based on trend. We're going to explain it based on confluence. We're going to explain it based on liquidity. We'll also explain it based on our Gann arc so that you see that even though as humans we cannot predict a war, our Urue market strategy can guide you safely and successfully as you trade with or without a war, whether you are aware there's a war going on, whether you are aware there is no war, whether you know what comes out in the news, whether you do not. With Urue market strategy, you can stay profitable trading. Now let's go on. While this trend ended, our timeline here, the price started to come down a little bit, as you can see somewhere here. The middle of this trend where we have our very well respected yearly timeline pushed price up in the middle of this trend. And while that was happening, price tried to come down a little bit. The quarterly timeline that showed up at the end of this trend said, oh no, you have to keep going up. So by trend, it started going up. And the moment it hit the new trend, did you see that it was just going up a bit gently here, go up and down? And then on Friday, March 6th, it shot up, went up rapidly into Monday, March 9, and then it dropped. Why did it drop? We will explain that. But as you can see, it hit a new trend and then shot up, dropped, came down again into the middle of this trend. Remember, we keep saying this: middle of the trend, start of the trend, end of the trend. Timeline. At the middle of this trend, another timeline showed up. Price saw it. The buyers came back in and then pushed price up. When this trend ended yesterday, price dropped again, came down just right here and picked up again and went and came into today, and we are seeing mostly red candles here today dropping the price. Why is this happening? It ended this trend yesterday, a new trend has begun today, but the US oil is dropping. Why is it dropping? We can see a timeline here, another timeline, quarterly timeline that has showed up for Friday, March 20. Let's pause here for the trend. Let's go into liquidity. As you can see, now the US oil is, should I say, theoretically the most liquid asset traded. Next would be gold, but gold and the US oil, they are competing. Who is the most liquid? If you buy and sell gold, you would see that you have a lot of volume, but US oil may not have as much volume as the gold does per lot size, per volume, may not carry that much weight, but it is considered the most volatile. It goes up and down very fast, and you can understand that's what oil does. Oil in the market spikes and drops sharply. So now that's why you have lots of liquidity, lots of liquidity. And we decided to simply keep it at just the yearly liquidity and 6 months liquidity. That's what you have there. You can see it's green and golden, right? Now we go back to where we started again. In this page, in this chart, you can see our trend again, our timeline, then we added liquidity. Can you see that at this point where our timeline showed in the middle of this trend on February 17, price was uncertain about what to do, dropped, went up, dropped again, picked up. Now, we deliberately removed the quarterly liquidity, the 6 months liquidity, no, the monthly liquidity, the weekly liquidity, and the daily liquidity. The reason is it would have made our chart look messy. You know, as you can see, the US oil is very liquid. That's why you see it can turn around anywhere, buy, sell as quickly as possible because the oil is a big sector globally. The oil sector is quite big, and that's just how it is. The oil sector is quite massive. Buying and selling production of oil is a big multi-billion dollar business. So you can't be buying and selling in such a market and it is not volatile. The big money move it up and down at will. So the price came down here, licked up a little bit of liquidity from, as you can see here. Our quarterly liquidity showed up here, as you can see, but it looked too complicated. The chart was too choked. So we removed the quarterly, monthly, weekly, and daily liquidity and just stuck with the big boys, the yearly and the 6 month. Then you can see the yearly and the 6 months actually control the trend. Our trend on this chart are the yearly and the 6 month trend, which is why they control the market. They are massive. They drag the market the way they want. Okay, let me sip some tea and then we'll begin in a second. Okay, let's continue. So now our timeline showed up here, price dropped. Remember the rule of the timeline? The rule of the timeline says whenever price hits our timeline, this timeline, they're strong guys. They tell price, you hit me, make sure you turn around. Price respects our timeline. Either shortly before price reaches the timeline or price passes the timeline or price hits the timeline shortly before, at, or after that happens, price must respect our timeline. Price must change direction, which is why you saw price try to lift itself up a little bit here, dropped, peak liquidity. All of these are what happens at our timeline. Price came here, touched our timeline, dropped a little bit, went up, and just before 2 or 3 days before our timeline, it dropped again. 2 or 3 days before the time, this was about 4 days before. Now, take note, price passes this timeline. Shortly after this timeline, it drops. Shortly before this timeline, it leaks up this liquidity. This is the Fibonacci ratio. This is the yearly Fibonacci ratio is right here. 6 months Fibonacci ratio is right here. And then you have my most trusted, the last angle. Now, some videos are coming out that we will explain all of this lines, the timeline, the last angle, the Gann arc. So make sure you subscribe to this video, turn on notifications, share, comments, let friends know, let investors know about this channel so that they can all benefit. Okay, so now the trend ended here. The trend was as if price wants to drop, and it was dropping. You see lots of red here. It met our timeline. Remember, the rule of our timeline is price come. If you get to where I am, you know what I'll do to you, especially when there's liquidity close, leaked up liquidity, hit our timeline, boom, started going up. All right. Now take note, the next place price reacted majorly was at this next 6 month timeline. We'll get there. Price went up, still climbing with the help of our liquidity. It was right at this place. It licked up this liquidity, went up. It literally jumped up. dropped from this liquidity. Remember, the moment price either it passes our timeline, hits liquidity, it has to drop. That is how the market moves. And what we do in Urue Market is simply to show you how the market moves. So with the help of this level, this is our last angle for the year, Fibonacci ratio. This is the high and low of the 6 months. The dashed lines are the high and low. We'll see it right here. And in the next chart, we'll show you the quarterly high and low that really pushed down that price. Let's go. So this trend ended here and then kept on going, hit a new trend and moved up, broke through all of this liquidity. Now again, why did this momentum happen like this? We will explain it from the news, We talk about the trend, we talk about liquidity, we talk about the last angle, the timeline, we talk about our Gann arc, and then we infuse the news. The news is the sentiment, the news is the noise that when everybody hears the noise, they jump, they run to it. How did the US create that noise? We'll find out. That noise that sparked this sort of momentum. Technically, we can see it on the chart, the trend, but this trend has not been happening like this all along. If you go back, in fact, here in our chart, we decided to take you back. We decided to give you a good tour of the past. We created this chart just to show you how. And if you are here looking at now take note, this chart we build it for the year, we build it for the future, right here, right here. This is where price is right now. And just if we may just briefly say this, um, the the US oil price right now, the market is seeing it dropping. We'll come to that. The market is seeing the market. While we're building this, we saw that this was going to happen. We said, oh, price is dropping from here. And a few hours ago, we saw that price was going to drop from here. We are on the 4 hours time frame anyway. We just want to put it at the 4 hours time frame so that you can see the market very well. So we said, oh, we're building it. We're putting this structure right here. We saw, oh, price is dropping, and we're seeing multiple reds there. So the Urue market strategy covers the future, as you can see. So imagine sitting down here, looking at this chart, and you see price bounce off this line, and you understand what those lines are. You see price align with this timeline, and you understand what that means. You just only have to make the right decision with this strategy. So back here, we took you to the past just to see how price was bouncing off these major liquidities, the yearly bounce of the timeline and all this. So this is it about liquidity, the liquidities that moved price up and down. Liquidities, this chart shows the liquidity, the liquidity, the timelines, and our trend. So you have the three put together here. Price is dropping for the US oil. Now let's talk about the sweet one, our time tested confluence. And as you know, confluence are those angles that when they hit it, price must respect it. Confluence are those angles when you hit it, I mean, you just have to either go back up, go back to where you're coming from, either up or down, because The confluences are strong. How do I do this? Let me scale down to the 30 minutes time frame so that the screen can be a bit large enough for you to see. So on this screen, we removed the liquidity. You can already see that liquidity was choking the screen on the liquidity page. So we removed the liquidity. Here you only have the timeline, our confluence, and our trend. So here we are, timeline, confluence, and trend. So let's come here. Let's come here and explain the trend and explain the confluence right here. Come in here and see what we're talking about. Good. And I believe you people have to thank that my friend for asking this question. Can you predict the war? It was his question that moved me to make this video, especially about the US oil, because the US oil is it's really taking the ride because of the war. So look at this. We always say that when price drop into a confluence like this, it has to reverse. And if you are holding the Urue market chart and you just see that price is here, there's a confluence here, there's a timeline here, this is the middle of a trend, price has dropped in here, and you see this black line and this red line, and then you want to sell, and then you feel that this price will break down here. I think you only did yourself wrong, because we have explained that when you see these happen, all of these put together, confluence, trend, timeline, you are here at this date, at this time. You simply have to do this. You simply have to close your eyes and tell yourself that US oil will rise, because that is what it is. The template, Urue market template, shows you that this is what will happen. All right? Okay. Because our timeline is saying, I am the yearly timeline. Price is coming down. I have seen it. There's a template, there's a confluence here, right here. And this is the middle of the trend. I should expect that this price will go up. And that is what happened, right? That's what happened right there. So even if we call you from the street, we just call you from the street, and imagine if trading was a game, we call you and you say, this is falling. Something is falling from up. This is the ground floor. This is the level. If it hits here, what do you think will happen? Now, imagine we call you from the street. You're just walking by, we come out and call you. If this thing that is falling here hits this place, what do you think will happen? Where do you think it will go? You would naturally say, it should go up now because it has hit this. And that is it. You'll be 100% correct because our Urue market chart shows this. So, can you predict a war? Of course not. We don't even want it, but we can predict our Urue market charts. All right, that's it. Now, let's see. Price came here, dangled between this confluence, was playing around. Should I pass this confluence or not? Okay, let me drop down because there is a mighty man standing here. One, the trend is about to end. My buying power is weakening. There's a timeline here that I can use as a support. And right by that timeline, there's a confluence. Okay, let me wait and see what happens there. When price comes in there, there's a confluence right there. There's a timeline that I can hold as a pillar and stretch myself up. The trend has ended. There's a new trend that will begin here. Okay, and my power is weakening at this point. Let me use this place as support. It went up. That is what our confluence chart shows. So imagine again that you missed it here. Imagine again that you saw this here and you doubted. And you, can you buy here? Then you within 1, 2, 3, 4, within the next few days, you see it happen again here. Wouldn't you believe that with your eyes, at least for the sake of your eye, believe that it will happen because Urue Markets mapped it out for you. Believe that it will happen because you're seeing this confluence right here happen. You saw it take place here, you see it here again. Please believe. There's a timeline right here. And then you can see the next timeline is far away. Before it hits this timeline, it would have entered a new trend. Let me just go with the trend because they say the trend is my friend. Let me go with it. You see, this is how the market is helping you. Now, the market it blew through all of these resistances, came into a new trend, and then shot up. It went up really high. Why did it go up high? New trend. It had not yet touched a new any other timeline. So price just the momentum kept going. By sentiment, we'll explain the news too. We'll explain how the US prepared for these moves, how they used the news. If you followed the news sequence preparing for this news, you would also preparing for this event, you would also see that happen. And then it dropped, came down here. Let me expand this so that you can see. Now again, you're seeing lots of red and black on the screen. The reason is, and I will say this again, the US oil is very liquid. So you see many confluences show up very close to each other, the same way you saw many liquidity. Look at this. It's so liquid that you may wonder, where do I buy? Where do I sell? Will it will it break through this yearly resistance? But by combining all that the market teaches and shows you, you can make a good decision. You can see and okay, it will go back from here, it will stop here, it will go up from here, and then it will drop. Back to our confluence. Okay, let me sip some tea. Look at this beautiful confluence. It was coming down all the way, broke through all of this liquidity, the red liquidity. It came to where black and red meet. It stopped and went back up. So just by looking at this chart, you can tell what the market is about to do. You can tell. You can simply tell without knowing anything. If you're just given this chart and say, you saw this happen here, what do you think? I showed that earlier. I showed that earlier. I showed that earlier. You saw it happen here. Black and red confluence. It peaked. Another black and red confluence. What do you think will happen? Price is falling down. It should rise because price only goes either one or two. No, price only go one way. It goes up and it goes down. Either of these two ways. It doesn't, there's no third way which would have added to the confusion. It's only up or down. And if you pick up when the momentum is up, there you make your profit. Okay. All right. So where are we now? Okay. We said that price was going to drop and it's dropping. All right. And then during the construction of this strategy on the US oil, right from here, we saw it. We saw now, okay, this was going to fall and you're seeing all red. You're seeing all. So if you do US oil, you may as well know what to do. Okay. This timeline is waiting to do something to the price, reverse it, or let it continue when it has taken enough liquidity. Okay, now this is it about our confluence. Now let's go to the arc. The arc is a beautiful, very innocent looking tool, but it guides the market. It guides the market. So imagine if you get it right looking at the trend, you get it right looking at the liquidity, you get it right looking at the confluence, and then the arc is telling you otherwise. You just have to realign. You have to realign your concept, you have to realign your understanding. No, 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 something is not right. If you get it right with trend, liquidity, confluence, and arc, we tell you in Urue Market that you can even predict the news that will come out. We tell you in Urue Market that without even knowing anything about the news, you will make the right decisions when it comes to your trading. So now the arc again, because the liquidity of the US oil is so choked, you can see the arcs standing very close to each other. Now let's show you an example with the gold arc. Okay, so we have there. You can see that there are some spaces between the gold arc. You see some space that allows gold to spike, to rise and drop, you see all of that. Okay. But when it comes to the now again, gold is struggling, gold is suffering. We explained it um, last week that gold will be tired of buying at the moment. And that's what is happening right now. Gold is tired of buying at the moment. And a video is coming out soon as to the behavior of gold. We have a video coming out soon on that. So subscribe to this channel and turn on your notification. Share, comment, like, and then you will receive our video when it comes. We'll let you know when it comes out. We have it in production. All right. So back to our arc, our gun arc for the US oil. Now, right here, we're starting our explanation right from the closest time that you can catch the momentum from February right up to this March, from mid-February. Now look at this. We saw the liquidity that pushed price up at this point. We are seeing the timeline that showed up here. We showed you the timeline in trend, liquidity, confluence. We added the timeline here too, so that you can see how the timeline work with the arc. And you remember the rule we have with our arc. Rule number one, when price is sliding behind an arc and it meets liquidity and timeline, it will go back up. Now the confluence we showed you in the confluence chart was here, right here. This is how confluence is. It was black. I have to demonstrate it the way it is so that you can see. And this was red. Good. So that confluence was there. Let me show you again so that you can see this is February 17. Yes, yes. February 17. Where are you? Please come on so that our friends, our viewers will see it. Right here, you can see that's the confluence right there. That is the confluence right there. You can see that. So we're showing you that confluence in the Gann arc. So right there, the confluence is there. So imagine that we see that confluence. We see that liquidity. We know that it is in the middle of our trend. We see this mighty timeline show up here. Remember the rule of the timeline? When price gets to me, it has to steer away from me. Go back in the direction you came. Price was falling down here, came to this timeline. Price, you have to go back. You have to respect this timeline. Okay? And then you come to the arc. The arc rule is when price is sliding down behind an arc and meets liquidity, it has to go back up. So put all of this together. Middle of our trend, liquidity, right there. I think, okay, this chart has shown it all because we've added the confluence and the liquidity. Middle of our trend, right here. Liquidity, right here. Confluence, right here. Timeline, right here. Sliding behind an arc and hits liquidity. Oh my goodness. What should you do? At this point, you buy. This is what Urue Market is telling you. You see how we show you the market? We simply explain it technically for you to see. We just explain it technically for you to see, my people. All right, so price flew across this arc, went up, and then it came down. Remember again, we have another rule for the arc when price is sliding in front of an arc. Price sliding in front of this quarter arc. When price is sliding in front of an arc and meets liquidity, let's draw it for you again here. We saw it all there, so let's put it right there for you to see. Okay, let me change this to black. Okay. Price is sliding in front of an arc, meets a timeline. Right here, this is a quarterly timeline. Meets our confluence, hits our confluence right here, and there was liquidity there. What should you do? Please just buy right there. Because all requirements have been met for that price to go back up. That's what Urue Market is showing you. And that confluence was there. Remember we showed you earlier, the confluence was there. We don't want to go back there again so we can make progress. There was liquidity, there was confluence, and then the ending of a trend. This trend had finished. The bullish power had ended here. It needed some refueling and it came back here. The timeline was there. It just has to respect that. Can you predict the war? No. Can you predict the Urue Market strategy, our structure? Absolutely. It has been tested over many years. To build this strategy, we test it. And again, we want to say, if you place our strategy on any asset, any commodity, it shows you where the confluence is, it shows you where the trend is, it shows you where the liquidity is, it shows you where the confluence is, confluence, liquidity, trend, and the arc. You don't need anything else. With or without the news, you are good to go. Now, a new trend started here and then it went up. It went up. Now look at this. It came across an arc. Now look, just see this. It blew up. It sliced through this arc. This was a yearly arc. It didn't stand the chance. Again, why? The US was preparing for this. We'll go into the news and explain it so that you see The news that led up to this, the sentiment, the news, the noise, the information the USD was giving out to lead to this. We'll show you. We'll explain it to you. So it went up here, broke through this, broke through the quarterly. It came in. Remember, we say when price is dropping within an arc and then it meets liquidity. We showed you where all the confluences are. We showed you where the liquidities are. It drops in here. It only has one way up, and you can just see that one way up from our Urue Market chart. Now it flew up here. It came right up here. At this point, we earlier told you it blew above the high of the quarterly. This line you're seeing here is not an arc. It is the high of our quarterly. This is where the quarterly ends. Blew above it and then came here and dropped. Why did it drop here? As you can see, that arc brought it back. Confluence brought it back. Again, the arc brought it back. Our confluence brought it back. Our trend brought it back. How did our trend bring it back? Take note. This momentum has been going on from the previous trend and it enters a new trend. It needs refueling to continue, number one. Number two, the arc here resisted it from going up. Number three, the arc here resisted it from going up. Number three, remember we say shortly before a timeline, when price hits liquidity, it must react shortly before. Now, by the timeline, if price is dropping or rising and it hits liquidity just by the timeline, it has to react. And that is what happened here. We'll also explain it by the arc. And then it went up again. This was the middle of our trend. Our trend, let me show you. Let's show you how this works. This is how the market moves, right? This was the middle of our trend, right? So it came in here. It leaked up a lot of liquidity right here. All right, welcome back, traders. Yesterday, during our recording, we noticed that when we were reviewing it, we noticed that we lost audio at some point. And so we quickly decided to do a fresh recording today so that we can complete that video and have you enjoy completely what we had for you. So we are happy to do this video so that you can enjoy completely what we have. So let's continue from where we noticed the audio ended. We said that price had leaked up liquidity from here, went up. You can see this level. And we'll just try to be very brief so that we can allow you to have some time to yourself. Price peak liquidity from here. Everything here supports the middle of this trend. Our timeline here, liquidity here. Confluence was here. We showed you previously that confluence lined up right here, and you just know that you have to buy. Yes, you have to buy. This was there's a huge liquidity that price shouldn't just break through. It has to reverse. Okay, so we said we wanted to infuse the news for you. So let's just quickly run through the news, how it aligned with the market here. And feel free, please, to contact Urue Markets. Contact us through our channel. Use the YouTube. Use the link to our Telegram channel is there. connect with us. Even if you just want to understand how to analyze the market using the news and you want to buy or sell, investors are welcome, institutions are welcome, traders are welcome. And then let's see how we can give you some benefits. All right, the news. Remember, it took some time for the US to prepare for their war with Iran, so we could trail that even the news spoke about something major coming up. Now let's focus on the crude oil inventories news. First one came out January 7. January 7, what do we see? Crude oil inventories was low, way lower than what was expected. In fact, it was expected to go high from minus 1.1 to minus 1.2. This would have gone higher. Their inventory would have been higher, but it went even below the previous. This would create demand. So let's see, January 7, what demand did that create? Our chart here can tell you exactly where that is. This is January 7. The news came out that where our inventory is low, so a demand was created here. Definitely a confluence would be here in our confluence chart. A liquidity would be here. This was the middle of somewhere the middle of the beginning of the year and even the middle of this confluence. It bounced here before the middle of this trend that you're seeing right here, somewhere here. Okay, the middle was at the beginning of the year, but then there would be confluence here, and if you look at it from here, good, it was right here, somewhere close. And you understand our rule is when price bounces on liquidity close to a timeline or by the timeline as it happened here, price must definitely react and reverse, go back to where you came from. So that is what we noticed happened there. So January 8 price started to rise. Why? Because the news here said we have very low inventory, so please come and buy, our oil is finishing. And you know the US is a major distributor, importer and exporter of oil globally. They are number one. So when they say their oil is going down, people will rush to go and buy. So the demand was created right here. And our chart showed that. So the next news that came out was 7 days after. Crude oil inventories come out every week. In the middle of the week, Tuesday, Wednesday, usually Wednesday, and it's weekly. So it tells you the state of their inventory when it comes to crude oil. January 7, the news here. January 7, the news showed that their inventory is now high. So what may have caused that? They started drilling more oil so that they can fill up their reservoir in preparation for what they were planning. And the news will tell us. So they said their inventory was going to go lower than it was, but it ended up being higher, as you can see. Did this create, because high creates no demand, low creates high demand. Did this create any demand in the market? Did this reduce the price? January 14, you look at it right here. Yes, it did a little bit. It dropped it. And as you know, when price broke through remember our timeline was here. We said when price reaches the timeline, touches liquidity, or passes the timeline, touches the liquidity, or is about to reach the timeline, touches the liquidity, it must definitely react. So looking at this, price reacted, came back under our arc. You know the rule of our arc, when price is sliding under, meets liquidity, it has to rise. So that happened right there. So because of this high volume of crude oil in the inventory, this price had to drop. And you can see it did drop. Our chart was there to catch it, because when dropping, it needs liquidity to start rising, and our chart caught it right there. Okay, please follow us as we proceed. The next news came 7 days after, Thursday, January 22, and crude oil inventories was way higher than it was. They thought it was going to go low because the price had dropped. People had bought from them. They had sold. The price went down. They thought, okay, if it comes down here, there will be demand. But the oil was even higher. So why would you have a high oil and then this push, high amount of oil in your inventory, and this push still came up? Because they were planning for something. They had to drill up more oil so that they can fill their reservoir and take care of themselves when something strikes with Iran and US. Before you go and fight, before you go and fight outside, you have to make sure you have enough food in your house so that when you come back, you are not hungry. So that is what happened here. But look at this, January 22. Where is January 22? Right here. So why did price go up? Look at our trend. Our trend says a new trend was started a day before, which was January 1 to January 21, but it could not cross this arc, so price had to slide below, and that sliding below was because they have higher volume of oil, and when you have plenty on your hand, your price definitely has to drop. So the price dropped a little bit, but our technical analysis, our structure says when price is sliding behind an arc, it sees liquidity, touches it, it has to go face that arc directly and hit it. And guess what? There was another timeline here just before this place. So the liquidity was for this timeline. Price pushed it up. Just before timeline, if price hits liquidity, it has to react. In the middle of the trend, price hits liquidity, has to react. In behind an arc, price slides down, meets liquidity, has to react. And that's what you see right there. So let's speed up a little bit, go up here. The next news that came out was on January 28th. Now, volume has reduced from 3.6 million to minus 2.2 million, which indicates that there is high demand. Oh, we do not have oil, our oil is finishing, come and buy. And countries run to the US even when the US coughs. Yeah, so if US is saying our oil is diminishing, please come and buy, people will go and buy. And that was what happened here January 28th. But look at this here, January 28th, there was a little push, bullish momentum was still sustained, but it hit liquidity here. Why did it drop from here even when there was low in the reservoir, which is demand? The reason is because the trend had ended. That bullish trend, which we see right here, the trend had ended, and our Gann arc was there to resist it. So it resisted it, brought it back under, but then you realize that when price slides under the Gann arc and miss liquidity, it has to go up. So now the next news that came out was on February 4th. That news still said that our crude oil has dropped even lower. Look at that. From minus 2.2, it has dropped even lower to minus 3.4. The US was still creating more demand. Come and buy more oil. It was minus 2.2. Now it drops even to minus 3.4. Our oil is going. So people have to go and buy. But look at this. That pressure that was used to buy, where is that? That was February 4 right here. Good. That pressure that was used to buy was to cross over this resistance, this Gann arc resistance. And it succeeded. It pushed through, and then price dropped a little bit because a new trend was about to start. When it hit that trend, price started to rise, as you can see. So now, the next news for crude oil was on February 11. Now, look at this. Boom. From nowhere, price has the inventory of the US says we now have 8.5. This is massive. Now, generally, this should break down. This should crash the price of the US oil. But look at the chart. Did it crash the price of the US oil? February 11, look at it right here. It pushed the price down, but not so much. On a good day, US come out with this amount of oil in their reservoir, the price has to come down, but it did not. Why? The US knew that they were planning a war, so they're preparing for a war. If you prepare for a war, stock your house well. So they stock up on fuel, made sure they had enough in their reservoir, 8.5 million. It dropped down the price, but on our technical side, we saw that yes, this price is dropping, but we were prepared. We saw that when price drops here, under this arc, finds liquidity, meets a timeline, is in the middle of our trend, meets a confluence. Go back and rewind this video, you'll see that we drew a trend here for you. We also drew another one here for you where we asked you if you saw this earlier and you doubted, and then you come back here, you see this confluence the same way, and the timeline at the end of a trend, a new trend is beginning. You have to believe that the same reaction you had here is what you will have there. Our time-tested Urue market strategy has proven that this happens. So if this happened, price went up, and then that momentum, because US was preparing for oil, they had to create that demand that we have plenty oil, come and buy, because they knew what they were planning for. So that momentum broke through this resistance, with this yearly timeline. This is my big man. Pushed price up, broke this 6-month resistance, broke this quarterly resistance, and went up here. Now we're still talking about the news. From there, the next news that came out was crude oil inventories -9. From nowhere too, the price sank very deep. Now this was to create huge demand. Now US oil is saying our tank is almost drying up. Come and buy now. And people rushed. From what you can see here, where is this? This is February 19, and right here, okay, that's the one we just explained. That momentum shot up, broke through this because the tank is drying. Everybody is going to the US to turn their tank. And you notice even when there is fuel scarcity, it is when there is fuel scarcity you see people queue up with gallons everywhere trying to buy fuel. And that is what the US did here. They said our tank is drying, come and buy. Any country that needs fuel, come and buy now. If not, you will not get fuel. And everybody rushed, created that demand, and broke through this resistance and came back down. Now, when it came back down, this was the next news that came out for crude oil, Wednesday, February 25. This was 3 days to the war. 15 point. The US was just doing stuff here. 15.9 million. They're now saying we have drilled the whole earth. We now have all the oil of the world. We have it here. 18.9. And where was this? Look at this. This was Friday 25. And this was the end of our trend. A new trend was about to begin. Now, a timeline was there, enough liquidity confluence here that will support their plenty oil. So this time around, it's not to bring it down, but to raise it up. Why? Because they had to stock up. They know that when we shoot the first bomb, and then there is war in Iran, Iran cannot sell, people cannot buy oil from Iran, and people cannot buy, Iran will disturb the sea, which it did. Iran had to blow up vessels. Iran did not, that war, this is war. People will not be able to buy. Where else can they buy? They can only go run down to US to buy, because US will clear their waterways, allow people to pass, while they are still throwing missiles at Iran. So because people could not go to Iran, to other countries nearby Iran to buy oil, you have to go to the US. And US had said, we have 15.9 million, so come and buy from us. And that was what happened. That's why you see this push up here. It met a resistance here. What was the next news that come? The US was just using data to play things around. Look at this. From 15.9 million, the price dropped, the inventory dropped to 3.4 million, which is demand. Less shows demand. So from 15, when they said we have plenty of oil, now they're saying we no longer have. Imagine that. This is March 4. Look at that. March 4 is here. So price shot up here. March 4, they are now saying our oil is drying up. Yet you cannot buy from Iran. You cannot buy from other nearby countries. The waters are disturbed. Iran will not let people buy oil from nearby countries and ship safely. If not, they'll blow up the vessels in the sea. Where else can you buy? You have to go and buy from the US. But they said they had plenty at the time. Now, March 4, they are saying they don't have. Imagine how mad people will run. And that is what happened here 2 days after. The moment it hit Thursday, March 5, price started showing US was saying, we are raising our price. We will be raising our price for this oil. People started rushing. It hit this new trend on Friday, March 6th. See what happened. Price just blew up right there. You can see. Our chart was there to explain it. Price, it broke this resistance. It broke and kept going up. It broke this quarterly and yearly resistance, flew above this 6 months and quarterly resistance, flew above this yearly resistance, hit this 6 months resistance, and the buyer said, okay, I think we've bought enough. You said your tank is drying up by giving us 3.4. I think your tank would have dried up now. Okay, that's how the US was playing, using data to play the game. All right. So, but then price had to drop because you can't explode your economy. The more things get high, remember we said earlier that the higher the price, it affects the citizens too. So price has to come down. At this just before our timeline here, and it had entered a new trend, price had to drop, and drop it did. It dropped, it sank back, but it rose again from here. It rose again from our timeline for this massive liquidity yearly and quarterly that we have, and this is the middle of our trend. Look at the trend here. I'll draw it for you to see. Good. This is the middle. Price stood there for a while and then rose back up. We saw all of that. Okay, we just drew this chart. We would have seen all of that if we had this chart on, because right now we can see whatever will happen again after now, because our friend asked us that beautiful question. We had to go and build this strategy on the USOIL. Now we are seeing it playing out like a football match that is on replay. All right, so there you go. The next oil that came out was March 11. Okay, March 11, yes. March 11 came out and said, okay, you know what? Our oil tank has not dried up completely. We still have a little bit of increase. So people ran again to buy from them. We still have some oil. People ran away. The war is still on. They're not buying oil from anywhere. They're buying it from the US. Okay, so now we go to the next news that came out. The next news that came out was, excuse me, where is that? Okay, this was March 11. So the next news that will come out will be today, which is March 18. So what do we expect will happen? Remember that when this oil price is this high, it affects the US. It affects a lot of things for them too. It affects their pricing, it affects their economy, it affects their businesses. Consumption, personal consumption expenditure is affected. Personal PMI is affected, as businesses, consumer sentiments are affected, business sentiments, everything is affected. So for that to be good for remember, they've made a lot of money already. By selling from here to here with such massive move, that was plenty, billions of dollars have already been made. So they will let the price drop a little bit, perhaps drop into this zone where this massive push happened. Where is that? So let's see. Perhaps they'll let it drop back into this zone where this massive push happened. This will be a good discount, or allow it drop into where it all started from, which should be beautiful discount, because the US generally would not want their oil prices to stay high. They want to sell it high to outsiders, keep it low for indigents, for the citizens of the country, and so they would naturally want to bring it down. We had shown you that this oil price will drop from here yesterday when we made the first part of this video. It did drop. So if you had bought, if you had said, okay, if you had sold rather, you had said I was going to put my sell on this would be a massive sell for you. But we still foresee that this price will drop. Now this buy that is happening here is because it hit the top of this Gann arc, which is our 6 months level. And if you look at our liquidity, you will also see that is what it is. You can see that it hit the liquidity here. That's why it's rising. But what does our confluence say? Our confluence says that there is no strong confluence below that pushed this price up. We still expect some fall for the US oil, and there's a timeline here waiting next tomorrow, Friday, to drag price even further down. Even if it is able to rise up a little bit, remember the USD would not want their oil price to keep hurting their citizens. If it hurts the citizens, it will hurt the economy because the business sentiments would have dropped. There'll be people will say, it's so difficult to do business. It will affect the NFP because non-farm employees would not be able to hire employee. Non-farm employers would not be able to hire employees. It would affect businesses. It will affect families. Households will be affected. Consumer sentiment will be low. And when that happens, it hurts the USD. So the US would naturally allow oil price to drop shortly before this timeline or after. Shortly after this timeline, it should drop even further so that it creates room for them to keep strengthening the USD, keep strengthening it from inside and strengthen it from outside. And that is where the Fed comes in. As you can see, the Fed is holding. FOMC is happening today, so we look forward to interest rate decision is happening today. What we also foresee is, will they lower the interest rate? Maybe. The CPI is already very high. CPI is showing that things are costly, and that's true. Whenever oil price rises, things are costly. So the Fed may still allow the interest rate for a little while or may lower it. Lowering it would mean that they want things to be a bit better for the economy, for the indigents, and allow price to come down a little bit, because right now it's high. And the only excuse they can give is there is a war going on. So if there is a war going on, what is the central bank doing? How are they helping the economy? They have to lower things a little bit to make it conducive for the people, because in any case, raising interest rate benefits the economy. Lowering interest rate benefits the economy. When you lower interest rate, it means you are telling people, come and buy things from us, it's a bit cheap. But you don't want to deflate yourself too much, and that could lead to deflation. But then you start increasing, which is increasing interest rate, hiking interest rate, raising interest rate. And that would also mean that people are finding that, things are getting better over there. There's money. If you buy something in the US, you gain profit. So people will rush to buy from them while the interest rate is raised. So in any case, higher interest rate, lower interest rate benefits the US economy. And in this case, right now, when they allow the US oil to drop a little bit, what will happen is that it will make the dollar even stronger to fight other currencies, because people will now say, okay, I think I can buy oil from the US while the price has come down now, and that helps the economy. So that is how the news aligns with our strategy. Contact Urue Market Strategy. Watch other videos on our YouTube channel. Expect more to come, and we will explain further how all of this play out. So you were watching the market for you. Contact us so that we can give you analysis. If you want a private analysis, exactly where and where to buy and sell, reach out to the market, and then we can do that. Contact us through our Telegram channel, and we will be happy to work with you. Until we see you next time, enjoy our videos, subscribe, share, like, comment, turn on notifications so that you get other ones that are coming. Thank you very much for tuning in to Urue Markets. We are Urue Market. What we do for you every day is to make sure that we show you where we use our strategy to show you every move of the market so that you can make informed decisions. Thank you very much. Bye for now.